Hello, good morning. You're watching Market Cafe on ET Now with me, Vinny Motiwala, along with me, Shreyansi Singh as well. Shreyansi, a very good morning to you. But what's happened in the US market? Nothing exciting because, they were closed on Monday as well. But overnight handover seems like they slipped further.
Yeah, absolutely. That is what is happening right now. So when you look at US stock futures, they ticked down, and this was after the major averages incurred a second day of losses. And the three major averages slid dragged lower by tech. When you look at the Nasdaq composite, that lost about 0.9% thereabout, while when you look at S&P 500 as well, you're looking at a downtick of 0.6%. The 30 stock Dow as well fell around 0.2% thereabout, and a slump in NVIDIA, which slid more than 4%, weighed on the Nasdaq as well as the S&P 500 as sentiment soured the day before the chip giant is expected to post its quarterly results. So concerns surrounding NVIDIA's high valuation have grown leading up to the company's earnings announcement slated for today after the bell, and the stock has soared about 225% over the past year. Other companies that are slated to announce their quarterly results would be the likes of HSBC, Wingstop, Analog Devices, and this is before the bell. Now after the bell you do have NVIDIA as well as Etsy, and the Pan-European Stocks 600 index. After you move on from the US markets and look at the Europe market, you're looking at a provisional close of down about 0.1% thereabout. The market broke a run of 4 positive sessions that took it near to record highs. And that's largely the move that we see when we're looking at US as well as European markets.
That's how the handover is coming in from the global markets. But let's look at what the oil prices are doing this morning as well. So it seems like as of now, at least the Brent crude oil prices quite subdued. Nothing exciting in terms of a move. They did pull back a little overnight as well. When you look at the handover that came in, and oil actually settled a bit lower in overnight trade as well. Let me look at the prices that are coming in terms of the Brent crude oil prices. We surely do watch out for that the Brent crude oil prices came in at somewhere around the $80 per barrel mark as well, and that is mainly because of the worries that are there in terms of geopolitical tensions that are shaping up as well as in terms of obviously the Red Sea issue that continues to loom as well. As of now, Brent crude oil is trading at $82.5 per barrel mark. That's exactly where it's trading at, while WTI crude oil is trading at $78.18 per barrel mark as well. So yes, keeping an eye out on the Brent crude oil prices as well. Nothing exciting that is happening on that front. Conflicts and geopolitical tensions are something that is keeping the crude oil prices a bit volatile as well. When you look at the gold prices this morning, gold prices, they hit overnight actually a 1-week high. As we saw the dollars actually starting to ease off, but on the back of that, after that, we saw a bit of a decline coming in terms of the gold prices this morning, down almost 0.2% in trade as the gold prices $2,036 per ounce is what the gold is trading at. But yes, keeping an eye out on the commodity front as well, Shreyansi.
Absolutely, and there's also a lot of events that we're keeping an eye on. So from the Eurozone, you do have the consumer confidence data coming in, and it's the last day to buy to be eligible for special dividend eligibility for Hero Moto, so keep an eye on that particular counter as well. And it's also the last day to buy to be eligible for dividend for a host of counters, so the likes of Hero Moto, Mrs. Bector's Food, Cummins, JK Lakshmi Cement, LIC, MRF, even the likes of PI Industries, Saregama India, SJVN, Sula Vineyards, Uniparts India. All of those, keep an eye on all of those counters. And in the IPO corner, you do have Juniper Hotels IPO that opens for subscription. So that will remain in the spotlight, and the lock-in period opens for the likes of TVS Supply Chain, Zaggle Prepaid Ocean Services, and you also have Ireda in that particular list. And in terms of other events, of course, we're keeping an eye on the farmers' protest that will be resuming today, and G20 foreign ministers meet in Rio de Janeiro, and the Greek PM beginning a 2-day India visit, and the meet with PM Modi as well. And as well as Atlanta Fed President Rafael Bostic, and his speech is something that the market will definitely keep an eye on.
Surely that's what the market could keep an eye out on as well. But let's move on and look at the top headlines that are there this morning from the global front. And just the day after that, we saw Goldman Sachs raising its year-end forecast for S&P 500. UBS follows suit and ups the target to 5,400, implying an 8% upside. Moreover, UBS has also increased the 2024-2025 earnings outlook from $235 to $240 and $250 to $255, implying a 9.1% and 6.3% growth over the next 2 years as well.
And the soft landing camp just got another boost to its outlook for the US economy. The Conference Board's leading economic index, a gauge of future economic activity, dropped 0.4% to 102.7 in January, signaling the lowest level since April 2020, when the US economy was struck by the COVID-19 pandemic-spurred lockdowns. The fresh data prompted the Conference Board to announce that a recession is no longer imminent for the first time since summer 2022.
Meanwhile, Goldman Sachs expects Bank of England to hold interest rates higher for a longer period of time before cutting them sharply in the second half of the year. The investment banking giant sees 5 consecutive 25 basis point rate cuts this year, lowering the rates from 5.25% to 4%. It then sees the bank settling at a terminal rate of 3% in June 2025. The BOE Governor Andrew Bailey, however, said that the bets by investors on rate cuts were not unreasonable but resisted giving a timeline.
And shifting focus to some stock-specific action then, retail giant Amazon is all set to join the Dow Jones Industrial Average from next week, replacing Walgreens Boots Alliance. Amazon will increase consumer retail exposure as well as other areas in the Dow. Shares of Amazon logged mild 1% gains in extended trade, while Walgreens slumped 3%.
Meanwhile, some more interesting news flow we are tracking this morning is Elon Musk announces recovery of the first human patient implanted with the brain chip from a neuralink. Says they are able to control computer mouse using their mind.
And PM Narendra Modi has set foundation for development projects worth 32,000 crore rupees in Jammu and Kashmir. The projects are spread across sectors like healthcare, education and railroad. Projects that were inaugurated include the first ever electric train as well as a brand new AIIMS facility in Jammu. Another project to be operational now is the world's highest railway bridge, the Chenab bridge, taller than the Eiffel Tower even. Operations for the bridge will commence almost 2 decades after its approval. PM later in his address also pledged to fulfill the dreams of the locals. Listen in to what else he had to say.
अब हमने संकल्प लिया है विकसित जम्मू कश्मीर का। मुझे आप पर विश्वास है, हम विकसित जम्मू कश्मीर बना करके ही रहेंगे। 70 साल से अधूरे आपके सपने आने वाले कुछ ही वर्षों में मोदी पूरे करके देगा।
Big push for Vikas in Jammu and Kashmir. Prime Minister Narendra Modi, during his second visit after abrogation of Article 370, has set the foundation for development of several projects here in this region. These projects are spread across different sectors like rails, roads, buildings, education and health sector. He flagged off first electric train. Now the electric train will be seen moving in areas right from Sangaldan to Banihal. Not only that, now the train will also move from Banihal to Baramulla area. This will not only connect Delhi with the hearts of minds of the people of Jammu and Kashmir, but also it's going to increase the connectivity between the different sectors. Besides this, it's also going to give an economic boom. Not only that, they are also kept in mind the environment of this region. That's one of the reasons that electric train will be run. Not only that, he also throw open one of the highest bridge of the world, that is in Riasi. This bridge is even higher than the Eiffel Tower of France, and it is only after 2 decades that this bridge has finally, the work on this has commenced, and this will be thrown open by the Prime Minister. Not only that, he also inaugurated All India Institute of Medical Sciences in a small distance, about 30 kilometers, right from Vijaypur to Nagrota, and that means from health sector to the education sector. There is a silent revolution in making. We have got All India Institute here in Jammu region. Besides this, we've got Indian Institute of Management, Indian Institute of Technology. And that means he is keeping in mind that how that there is a need for the transformation and change of the mindset of the youngsters.
Okay, that was all about the update that is coming in on the Jammu and Kashmir front. But on that note, we are going to slip into a very short break, viewers. Don't go anywhere. After the break, we'll be telling you all what the Asian markets are doing this morning as well.
Welcome back. Thank you so much for staying tuned in. Well, let's move on to some other updates then. And the Reserve Bank of India has released its monthly bulletin on the state of the economy. It highlights the Indian economy's sustained growth momentum as well as its expected capex growth. Ankur Mishra is standing by with the key details. Ankur?
Yes, the likelihood of stronger than expected global growth scenario has brightened as per the latest bulletin which has been released by Reserve Bank of India in the State of the Economy article. It has highlighted that Indian economy continues to sustain momentum which is achieved in the first half of the current financial year, and that is continuing. Apart from that, there is expectation of fresh round of capex by the corporate sector is likely to fuel the next leg of growth in the Indian economy. And if you particularly talk about the inflation front, which has come off in the month of January after spiking in November and December, the high frequency indicators as far as the February month is concerned, it has indicated that while cereal prices rose further, pulses prices have declined. Similarly, if you talk about edible oil prices, that has also remained in broad-based decline scenario. And especially for the month of February, the data indicates that among key vegetables, tomato prices have spiked, while on the other hand, if you talk about onion prices, if you talk about potato prices, all these prices have corrected further. So all these scenarios indicate towards the projection which has been given by Reserve Bank of India of 5.4% CPI in the current fiscal and 4.5% in the next financial year. However, Reserve Bank of India has already mentioned that they remain watchful on CPI front, and the governor has consistently maintained that the war against inflation is not over.
Okay, thank you so much for that update coming in. But the Finance Ministry's January economic review highlights India's resilient economic amid global challenges. Despite the weakened export demand due to a global slowdown, the outlook remains quite bright. Let's go across to my colleague Sumit Chaturvedi, who's joining in with us to give us more details on the January economic review. Sumit?
Well, overall, it looks like economy is going to have a decent overall. We can say that the next few months ahead, outlook is good. Many factors are responsible for that. As per the outlook report, first of all, interim budgets, the measures have been announced, are going to help the economy. Rabi crop is the sowing overall has been good, and that's what going to support the agriculture side of economy as well. On the geopolitical side, yes, there are certain headwinds, but notwithstanding that, economy is likely to grow well only. Also, as far as the monsoon is concerned, it is forecast to be better, is to be normal, and El Nino fears have subsided. That's what is also going to contribute more to the overall, we can say that, the betterment of the economy. Also, spending on education, healthcare, they're also good, and the report also mentions that the fiscal consolidation roadmap is going to be on a better side only. All these measures have been taken without disturbing fiscal mathematics at all. On the trade side, yes, there are some concerns, but Indian economy is hopeful that overall trade balances will be maintained as well. As far as rainfalls are concerned, they were better in winter also. So there is nothing negative so far is on the horizon for Indian economy, and that's what is going to contribute for the positivity as far as Indian economy is concerned.
All right, thanks Sumit for those details. But we also caught up with Siddharth Sanyal, who's the chief economist and head of research, Bandhan Bank, and he talks about whether or not he sees recession fears of advanced economies having a spillover impact on India's economy as well. Listen in to what else he had to say.
Even if some of the other economies lose momentum to some extent, I think just because the larger economies are coming back into strength will possibly be offering a little better backdrop so far as the global demand is concerned. So on that particular aspect, while you cannot vouch for say strongly that we are completely out of the woods, I think to that extent the situation has improved compared to where we stood 6 months or 1 year back. I think from that point of view, it's a relatively more optimistic scenario.
Okay, let's move on and how to harness the power of generative AI for better growth. That's the question we pegged to the top bosses of SAP Labs, Microsoft India, as well as IBM India. Listen in to what they had to say on the future of AI.
Today, it's not just about building from India for the world. It's building from India for also India. The market, right? What has changed phenomenally is that you have a fast growing market right here. And just with the demography that we have here, right? If you're able to solve it at this scale, you can solve it anywhere.
A lot of people say it's hyped. I disagree with them. I don't think it's hyped enough. There are 30 million developers in the world today who can code, who can build something. Imagine if there are a billion developers in the world. Imagine if there are a billion Indians who can code using natural language, right? So that's a massive shift. The other thing is this reasoning engine. If you look at the history of tech, all we've done is digitize things, people, places, events. But we never had the reasoning engine to make sense of those patterns beyond the human mind. But now with these models, you can really connect the dots.
Technology in every inflationary environment has always worked as a deflationary force because it helps you get to better productivity, better enhancement of better automation and all the rest of it. The speed at which India is growing, the innovation that India has already delivered with the advancements that we've seen with DPI and UPI and all the rest of it. And then you look at the demographic dividend that India has the potential for. If that demographic dividend can be appropriately skilled to make India the skill capital of the world, when you put those three things together, just think about the multiplier potential that India can deliver to the world.
At the NASSCOM event, we also caught up with the managements of Tech Mahindra and KPMG. Tech Mahindra's Mohit Joshi clarifies on how the global layoff galore cannot be entirely blamed on AI, as well as KPMG's Akhilesh Tuteja is also of the view that integration of the old and new tech is the way forward. Listen in to a slice of this exclusive conversation.
Globally, compared to 6 to 8 months ago, it does feel that there is a slight bit of more optimism on the ground. I don't feel that any of these job losses are directly linked to AI, and I certainly, it's impossible to predict what the future economic outlook will be, right, for the economy.
Post-skilling in AI, what are the various avenues that will open up for the skilled workers going forward?
Look, I do feel that, we are obviously living in a very different paradigm from 30 years ago, where you got one degree and then you rested on your laurels for the next 30 years. The need to reinvent ourselves constantly has never been more true. But also, I think AI gives you these opportunities, right? Like, for instance, in TechM, we are creating this platform where people can specify what their desired career will be 5 years from now. And then, the sort of program will suggest the training interventions that are needed. It will suggest the sort of projects that will be available within the system that people can take. So you can really use AI to craft a long-term career path for yourself, right? And increasingly companies like ours are making a lot of opportunities available for people to learn and to mature their skills.
We're talking about layoffs, but how much of incremental job creation will happen through AI is what your sense is?
So first of all, I would say that we are not talking about any job loss because of AI. I want to be very clear. At least that's not what I'm hearing. The second one, coming back to your learning thing, I do want to say that there's not going to be learn now and post that. No, it's going to be continuum. as Mohit talked about. So the learning has to be more continuous, and therefore the opportunities are also going to be more evolving. So in the short term, the opportunities are going to be people who can build use cases on top of the existing model. But for a country like India, we also need to build some foundation models. And then the third one is that what we have not yet seen is that how AI and the existing technology really integrates. That's what is actually the power of the IT industry.
All right, time for a quick break then. But when we come back, we'll take a look at some stock-specific news then. Welcome back. Thank you so much for staying tuned in. And it's in ET Now Newsbreak confirmed. Swan Energy QIP issue opened at a floor price of 703.29 rupees per share. We have Cheryl D'Souza with more details. Cheryl, congratulations on getting the story right. Tell us a little more about this particular QIP now.
It's an 18-hour news break confirmed. On February 20th, we broke the story that Swan Energy was in talks with participants. They were going to launch their QIP worth about 4,000 crore rupees. Like you said, it's a mammoth-sized QIP issue. They are going to use the proceeds for the investment into units, for actually modernizing their facilities for debt. Also, what you're picking up from sources right now is that this particular QIP has been seeing very strong interest from MFs, from mutual funds, and also select FIIs. From our sources, what we're picking up is that SBI MF, HDFC MF, Quant, Union AMC, as well as Tata AMC have shown a very strong interest in the QIP. And apart from these entities, you also have Bandhan Bank, Samco, Birla Life, Morgan Stanley, PNB Paribas, as well as Hong Kong-based Infinity Family Office that have shown strong interest in the Swan Energy QIP. So yes, at the mammoth-sized QIP, the news break has been confirmed. They are going to, the QIP has been launched. 4,000 crore rupees is the size of 3,000 is the base. 3,000 crore rupees is the base size with an upsize option of about 1,000 crore rupees.
All right, well, thanks, Cheryl, for those details. Let's take a look at the paint sector now. And there's a couple of brokerage notes coming in. So when you look at JP Morgan and what they have to say, they're flagging a cautious demand narrative. They're talking about industry-wide margin moderation as well. And they're saying that there's a need for higher investments to challenge margins. They're also, when they're looking at specific sectors, they're talking about subdued decorative paints demand this year. And they're also flagging that the luxury paints demand held up quite well. So now when you look at the uncertainty on the financial year 25 revenue growth outlook, that is something that they're highlighting as well. And in terms of their stock-specific views, they're talking about maintaining a neutral rating on Asian paints. And when you look at their view coming in on Pidilite, they're talking about how there's a relative overweight on exposure to B2B as well as infra. And that's for Pidilite. But when you look at Grasim as well, what Jeffries has to say is that they're talking about the company being set to launch its paint product and inauguration of the first paint plant in Panipat, and that's something that they're highlighting. And when you look at Jeffries' view on Grasim, they're also talking about their ambition to become a profitable number 2 player in paints. So that's something that they had to say about Grasim as well. So that's largely the view coming in on the brokerage radar for the paint sector. But we also have Ansh who's waiting by to give us the futures and options roundup. Ansh?
Right, so Nifty touched record high level for second consecutive session. Also, it touched 22,200 mark for the first time. If you see the chart, Nifty has been advancing for 6th consecutive session, which is the longest buying streak seen in at least 2 months. Also in index futures, we are seeing open interest declining by over 3%, indicating short covering, which is also one of the positive sign. The only drawback is the whole up move was dominantly led by HDFC Bank, and so do in Nifty Bank as well. The overall participation in the market was actually missing. The stock contributed around 60 points in Nifty's up move and around 300 points in Nifty Bank's up move. Also, if we see the HDFC Bank chart, the stock was taking good support around 1470 last year, but after the breakdown, it started acting as a strong resistance, and currently stock seems to be heading around this level only. Also, if you see the Nifty Bank chart, If you see the chart, Nifty Bank seems to have given a slight breakout from that 50 DML level, and the index has been advancing for 6 consecutive sessions, marking its longest buying streak at least in 8 months. So here also it seems positive, but only drawback is that here as well, HDFC Bank was the main driver. Also, if we see what FIs did in index futures, they added around 4,500 long contracts and they covered 4,500 short contracts. So net to net, we are seeing net addition of around 9,000 contracts on upside, due to which the total FI long position have inched higher from 39.3% to 40.8%. With this, the total long has reached to 18 session high. So good positivity coming in FII in index future, at least, if not in cash market.
Absolutely, Ansh. Well, this was definitely an important roundup coming in, because we did hit those record high levels yesterday in trade, and HDFC Bank had quite the contribution coming in when you look at those charts. But tell us more about which stocks you're keeping on your radar this morning as well.
Right, so Ashok Leyland will be the first stock in focus for today's trading session, as company has set up a new integrated commercial vehicle plant focused on green mobility in Uttar Pradesh. Once operational, the plant it will have a capacity of around 2,500 vehicles per year. Apart from this, Whirlpool will also be in focus, as company's wholly owned subsidiary Whirlpool Mauritius has executed the sale of 30.4 million equity shares of Whirlpool India. With this, the total ownership has drastically will reduce from 75% to 51%. Thermax will also be in focus, as company has entered into a license and technical assistance agreement with Flowtech company, which is in South Korea. So due to this, even this stock will be in focus. Let's talk about Warren Beverages as well. So company and PepsiCo has through its respective subsidiary, wholly owned subsidiary Warren Beverages, Morocco and Premium Nutrition has entered into an exclusive snack appointment agreement to manufacture and package Cheetos in the territory of Morocco, which will have a capex of around 100 crore. Let's also talk about ABB. They have reported their numbers and they have registered revenue of 2,757 crore, which is up by over 13%. Also, the PAT has jumped by around 11%. So keep an eye on the stocks.
Absolutely, Ansh. We'll keep an eye on all of those counters, but there's a host of counters that...
So let's first talk about KFin Tech, where Jefferies has revised its target price to 760 rupees per share while maintaining its buy rating. So why they believe is that they believe that it is one of the top pick for the company. And KFin, if we look at the KFin's investment, Jefferies believes that it is at an inflection point, and that is why from here on we may see some kind of growth kicking in because of their investments. International clients are also ramping up for the company, and lastly, they also see that the company is entering into new markets like Hong Kong and Singapore and exploring inorganic opportunities. So that is why they are being a little bullish on KFin Tech, and while maintaining 760 rupees, they have maintained their buy rating. Let's also talk about Hero MotoCorp, where Morgan Stanley has given a tactical call where they believe that we may see some kind of decline in the share if we compare it with the relative index for Hero MotoCorp. Because if we look at the two-wheelers industry sales, they are flat at 4% on a YY basis. I mean, the growth was only 4% on a YY basis, and the retail market share for Hero MotoCorp has declined from 32% to 28% in CY24 so far, and that is why they see some kind of limited support from the valuations, and earnings risk is also there, and that is why they have maintained underweight rating and a target price of 3,638 rupees. And lastly, let's also look at some auto numbers. CLSA has come up with interesting facts about two-wheeler auto numbers, where they believe that we may see some kind of flattish numbers for auto segment in February 2024. If we talk about electric two-wheeler segment, we may see some kind of flattish demand there as well. And competition is also escalating in two-wheeler segment. So for example, Hero and Royal Enfield may see some kind of decline in the volumes, but at the same time, TVS and Honda may see some kind of double-digit growth in the volumes in this month. And lastly, Bajaj is gaining some kind of market share if we talk about 125cc market, and that is why Bajaj, some companies like Bajaj, TVS, and Hero and Royal Enfield, of course, will definitely be in focus in the month of February.
All right, thanks Gaurav. So we'll definitely be keeping an eye on all of those counters, but it seems like this is the season for market deals, as QIPs worth more than 10,000 crore have already been announced so far this year. And several PEs have also exited via multiple blocks. Tell you what, let's go across to Sharath to go through that particular list.
Well, the investor sentiment is very strong and the markets are at the record high levels, as we see a lot of deals, the QIP preferentials and even stake sales happening from institutional buyers. Now importantly, if you look at it, the QIP numbers, that PNB is having a strong announcement coming in earlier in January for almost 7,500 crore raise via QIP or FPO. And recently, two stocks would be focused in today's trade, which is Swan Energy and Union Bank of India, where they have launched their QIP sizes ranging between 3,000 to 4,000 crore rupees. Also, DB Realty recently announced a 2,000 crore QIP, and smaller numbers coming in for JK Tyre, E-Mudra, as well as Capsite Infra. Of course, stocks have been also buzzing and they have rallied also over the last 1 month. Apart from the QIP deals, we have seen an interesting part of stake sales and of course larger exits coming from private equity players. Recently, Whirlpool's, the promoter, sold almost 24% stake, and that's roughly, you could say, a 4,000 crore value. In the same case, we are also having Minda Corp, where HNI, a large HNI, had sold almost 4% stake, which was absorbed by domestic buyers, while also sale coming in for Sula Vanias, where Verlin Witnessed, and Data Patterns, where Florentry kind of private equity players exited fully. Also, a couple of deals in Policy Bazaar and Indus Stars, we saw almost Temasek and KKR respectively exiting their entire positions.
All right, thanks Sharad for that update. Moving away from that long list then, our Indian oil and gas players in for a multi-year re-rating. We took the discussion forward with industry veterans and analysts to understand the future of select stocks, a detailed check on valuations and the quantum of the expected upside in the space. Let's hear out a slice of this particular conversation.
Good stocks are few now, which can create value, or many are already overpriced. And therefore, that is what is unlocking the value. And in addition to that, industries have also spent capex. There is increase in the capacity, there is increase in the distillate yield, there are the more bottom upgradation projects which have been brought in addition to petrochemicals, etc., which is having the increased profitability, better operational efficiency, and increased volume. So I think that is what is the sum total which we are seeing in the OMC's valuation. And I see there is further value definitely to unlock. It is up the market to realize it.
ONGC has been delivering in the past in the most of the challenging, difficult times at a low prices, high prices, giving subsidy discounts. Even today, despite production being stagnant, the current contribution of ONGC to the energy sector is immense. ONGC still has a lot of intrinsic depth in terms of the valuation to keep delivering for decades to come.
Oil prices were to remain benign, I think the PE multiple for all the three companies can substantially increase even from here on. So in the base case, I think BPCL, which is typically traded at a substantial premium, can trade anywhere between 13 to 14 times on a 1 year forward basis. And then if the earnings are benign, I think the best is yet to come for all the three stocks.
All right, well, that's what the experts had to say about the PSUs. But with that, we're out of time on this edition of Market Cafe. From me, Shriyanti Singh, as well as the entire team that put the show together, thank you so much for watching. But you don't go anywhere because the market takes all of the action forward.